Welcome, James Quincey, Chairman and CEO of Coca-Cola. Good morning. It's good to have you.
Good morning. Nice to be back.
So the Coke growth story that you showed, double-digit organic growth, how much of it, James, is higher prices that you've passed on to the consumer versus just solid consumer demand? How do you think about that?
Three big pieces what's driving our top-line momentum in the quarter and so far this year. One is underlying consumer demand. You could see that in the robust volume growth rates ahead of where we traditionally have looked pre-pandemic. Yes, there is pricing coming through, the rate pricing, if you like, which is coming through from the cost inflation, which so far has been absorbed by the consumer. And then the third piece, which is important for us, is the effect of the reopening, the away-from-home channels having largely reopened now post-COVID, post the restrictions. Those three things together are giving us a really strong top-line momentum in this quarter and year-to-date.
So the question is, what of all of that continues? You did have the confidence to raise guidance on sales and profit. Why is that?
We feel confident in our strategy. We've spent a good number of years refocusing on getting better marketing, better innovation, really revenue growth management, that combination of the right package and price point, and really executed by our bottling partners. And that's driven the momentum of the Coke system. We feel we have a lot of it. We feel we're engaged with the consumer. Yes, we can see some effects of reductions in purchasing power out there in the marketplace, but we're confident in our strategy in terms of seeing us through in the year to go. That's why we raised our guidance, and we feel we'll have the momentum going into next year, which will also be another tough year.
So you mentioned some pricing, obviously, is key right now for you and your competitors, everyone in the consumer space. You told me this morning that you expect the pricing, higher prices, smaller bottles and cans, however you pass it on, to continue toward the end of this year and into next. So is the inflationary outlook not getting any better?
Clearly, there's going to be above normal input costs, whether they be commodities or wages or other services going into next year. So we are expecting pricing to be ahead of normal next year on top of what's happened this year. Of course, as you look around the world for our international markets, there's not just the local pricing. There's the kind of the effect of the devaluation of their currencies relative to dollar-based commodities, which is driving inflation around the world. And so we do see next year with higher than average pricing, and that's really why we have to count on our momentum going in the year and the strength of our strategy to take us through and really earn the right with the consumer through the retailer to be engaged with them and to earn every dollar they want to spend.